Hello, everyone, and welcome to NUHU Online TV, the home of deep analysis, powerful insights, and bold conversations about crypto and financial markets. Today, we're diving into one of the most explosive topics circulating the crypto community right now. Is Ethereum gearing up for a 100x comeback? And more importantly, are we entering what top Wall Street strategist Tom Lee calls a supercycle? A long-term, structurally driven, transformational bull period. This is not just headline hype, not just rumors, not just normal market noise. This is a thesis backed by years of research, real data, market cycles, and macro-level observations. And today, we are unpacking every part of it slowly, deeply, and thoroughly. So sit back, relax, and get ready for an ultra-long masterclass, because here on NUHU Online TV, we break it down to the bones. Before we get into Ethereum, let's answer the question, why does Tom Lee matter? Tom Lee is not your average influencer, TikToker, or Twitter trader. He is a former managing director at JP Morgan, co-founder of Fundstrat Global Advisors, executive chairman at BitMine Immersion Technologies, one of the earliest mainstream analysts to publicly support Bitcoin, a man with a multi-decade reputation in financial modeling, macroeconomics, and market forecasting. In 2017, when Bitcoin was still considered a fringe asset, he stood on major financial networks and argued that BTC had a legitimate long-term future ahead of it. He was mocked, dismissed, ignored, until Bitcoin skyrocketed. Then he gained worldwide credibility. Now this same analyst is making one of the most daring predictions of his career, that Ethereum is about to repeat Bitcoin's historical supercycle pattern. So, whether you believe him or not, you must understand his reasoning. Okay, let's define this word first. Supercycle. A supercycle is not a normal bull run, not a pump driven by short-term hype, not price action that lasts a few weeks or months. A supercycle is a long, multi-year expansion driven by structural demand, supported by innovation and adoption, resistant to short-term crashes. Think of the industrial supercycle in the early 1900s. The internet boom from 1998 to 2010, the smartphone revolution, China's mega infrastructure cycle, Bitcoin's rise from 2012 to 2021. A supercycle is where the world decides this technology is not going away. It's becoming essential. Tom Lee argues that Ethereum is entering this exact type of long-term expansion. Now we break down Tom Lee's main pillars, one by one, in detail. Pillar 1. Deep drawdowns are not failure, they're features. Tom Lee explains that Bitcoin's greatest bull market happened after massive collapses. -50%, -60%, -75%, and even -80% declines. Yet BTC still delivered over 100x returns. His conclusion? Volatility does not eliminate long-term value. It tests emotional conviction. He believes Ethereum is experiencing exactly the same pattern. Pain now, reward later. Pillar 2. Ethereum is the world's decentralized computer. Unlike Bitcoin, which acts as digital gold, Ethereum acts as the settlement layer of DeFi, the execution layer of smart contracts, the foundation of Web3, the backbone of NFT infrastructure, the engine for tokenizing real-world assets, the core network powering DAOs, the underlying tech for thousands of dApps. If the world truly digitizes assets, contracts, identity, property, and finance, ETH is positioned at the center of this transformation. A supercycle requires use cases. Ethereum has hundreds of them, and more emerging every month. Pillar 3. Institutional capital is coming. Tom Lee says we are still in the earliest stage of institutional adoption, Think about it. Global financial markets hold trillions. Crypto is still tiny in comparison. As big players slowly begin allocating to ETH, pension funds, sovereign wealth funds, asset managers, hedge funds, family offices, corporate treasuries, even a tiny percentage of global capital flowing into ETH could drive massive value growth. Pillar 4. Layer 2 expansion is the turning point. In the past, Ethereum struggled with high gas fees, congestion, scalability problems. But Layer 2 networks like Optimism, Arbitrum, Base, ZK Sync, etc. are now absorbing huge transaction volumes, making the network faster and cheaper. Tom Lee sees this as a key structural evolution, one that sets the stage for long-term adoption. Pillar 5. The psychological element. Lee often speaks about existential moments. These are moments where investors lose hope, the community is divided, media narratives turn negative, and prices fall dramatically. History shows these moments often come right before massive reversals. He believes Ethereum is currently inside this psychological zone. For fairness, we must examine the counterarguments. A good investor listens to both sides. Critique number 1. Ethereum's competition is intense. Ethereum is the market leader, yes, but challengers are rising. Solana, Avalanche, BNB Chain, Cardano, Aptos, Sui, Near. They promise faster transactions, lower fees, better scalability, different architectures. Some analysts argue that Ethereum may not maintain dominance. Critique number 2. Ethereum is still expensive for ordinary users. Even with Layer 2 solutions, Ethereum's fees can be unpredictable. This affects retail users, small investors, and newcomers who cannot afford $10 to $50 transaction fees. This barrier could slow mass adoption. Critique number 3. Lack of a clear timeline. Tom Lee did not provide a price target, a year, or a timeframe. This creates ambiguity. A thesis without time depends heavily on patience, something many investors lack. Critique number 4. Macro and regulatory risks. Government restrictions, interest rate changes, global recessions, or security failures could disrupt Ethereum's path. Let's address the headline. Is 100x even realistic? Consider this. Bitcoin did it. Many tech stocks did it. Entire asset classes have done it. If Ethereum transforms into the global settlement layer for Web3, tokenization, and digital finance, a massive valuation increase becomes mathematically possible. But, and this is key, 100x is not guaranteed, not predictable, and not short-term. It could take 5 years, 10 years, or more. The Supercycle is about direction, not speed. This is not investment advice, but here are practical insights from the thesis. You think long-term. Supercycles reward patience. Avoid leverage. Tom Lee warns strongly against using leverage during volatile periods. Educate yourself. Research Ethereum's fundamentals, upcoming upgrades like dank sharding, and L2 ecosystem. Diversify. Don't put everything into one asset, even one as strong as Ethereum. Manage risk. Never invest money you cannot afford to lose. Stay emotionally disciplined. If a 60% drop would make you panic, you might not be ready for crypto supercycles. And that concludes this ultra deep dive into Tom Lee's massive claim. Is Ethereum entering a supercycle? Could it deliver a 100x return? Whether you believe it or not, the thesis is powerful, thought-provoking, and backed by years of market history. Now I want to hear from you. Do you think Ethereum is the next megacycle asset, or is the competition too strong? Drop your thoughts in the comments below. I'll be responding. Don't forget to like, subscribe, and hit the notification bell so you never miss another powerful breakdown here on NUHU Online TV. Thank you for watching. Stay sharp, stay informed, and stay ahead of the market.